To everybody, and welcome back to this second session of the day. We're very excited to have such a great panel lined up for us today to discuss this very relevant and pertinent topic, which runs hand in hand intrinsically with the NPL question in Greece and Cyprus. We have a really great panel, which I will let our panel moderator, Yannis Daskalakis, go ahead and introduce. We're all looking forward to it. So thank you for joining us, everybody. Yannis?
Thank you, Martin. Good morning to everyone. At first, let's take a minute to congratulate Martin, DDC, and all of the team for organizing this great event. I would like to thank you for inviting me to be part of this great panel. And of course, it's my great pleasure to moderate a panel that represents the real estate side of a greater talk about the non-performing loans in Greece. I really hope that at the end of this discussion, you will be able, all of you, to have a greater view of all the problems, the challenges, and of course the opportunities deriving from the real estate market in Greece right now. And for that reason, we have lined up this panel with some of the greatest names of the real estate industry in our country. So let's take a minute to know them, to understand who they are and where they come from. And we will jump in directly to the discussion. So ladies first, Ms. Pateraki, please give us 30 seconds of your time to let us know who you are and how you are involved in real estate.
So good morning, everyone. It's a pleasure and an honor to be part of this panel. So thank you for the invitation. I'm the Chief Real Estate Officer for doValue Greece Real Estate Services. It's a company that was created within the doValue Greece to cover the real estate needs of both the portfolios that doValue is covering in Greece, but also manage REO needs of other investors that we do not necessarily hold the portfolios. We've been active for a year now, and we have a full team already in place, which can support, as I've mentioned, all the pre-REO and REO needs of doValue Greece and our investors. So thank you.
Mr. Papachristou.
Good morning to all of you. Thank you for giving me the opportunity to participate in the panel. I'm the chairman and CEO of BuildUp. BuildUp is a real estate development and investment company providing special services also to NPL owners and NPL services regarding the technical and orange due diligence of their assets. Our company goes back to 1970. We have a long period in the market. And I think we have a big expertise in these issues that we are going to discuss.
Thank you, Mr. Markopoulos.
Yes, thank you, Yannis. Thanks for the invitation, Martin. We really appreciate to be here in this very interesting panel, in this very interesting event. So I'm one of the three co-founders of Prosperity, and I am also the CEO of the company. Prosperity is a PropTech business. PropTech means technology, a company that is being involved in the real estate business. We started the product, our platform, 7 months ago, and we are growing fast. Our target is to digitize and automate the whole process between the onboarding of an asset up to the closing of the transaction. The company is mainly a tech company with a lot of expertise in both in the tech, but also in the real estate business. We are 30 people. We're growing fast, as I told you, and we're very happy to discuss today about how technology and data will transform the real estate, not only in Greece, but also globally.
Thank you, Mr. Haralabopoulos.
Hello, everyone. Thanks, Yannis, for the intro. So I'm Panos Haralabopoulos. I'm the Managing Director of Solon Property Solutions in association with PrimeYield here in Greece. The range of professional services that we provide include property valuation, valuation audits, property management, market research, technical due diligence, and through our joint venture with PrimeYield, we provide valuation, research, and advisory services for informed decision-making in NPL transactions. strongly supported by Prime AVM and Analytics, which is an advanced technological solutions for property valuations and underwriting.
Thank you, Mr. Manjouratos.
Thank you, Yanis. Hello, everyone, and good morning. I'm delighted to be among colleagues and friends that we have either cooperated in the past or we're currently cooperating or we have established working relationships. From my end, my name is Chris Manjouratos. I'm a director in Arbitrage Real Estate at Arbitrage Real Estate, currently leading the commercial appraisal and underwriting project engagements. For our firm, let me put it this way, we are a real estate advisory and management firm providing a wide spectrum of services for the property sector. Our offering can be broken down in 4 main categories based on the actual service. Is, of course, the commercial advisory that has to do with valuation, research, and underwriting. The technical advisory, which includes technical due diligence and sustainability advisory projects. Again, we have the development management, which includes planning and cost management, and of course, the project management that is currently showing a bit of growth in every asset class that we are engaged. And the last bit is the asset management offering that we have that has to do with broadly put agency brokerage and commercialization of assets.
Thank you, Chris. Mr. Mundis.
Yeah, hi there. Hi, Yanis. Thanks for the invite once more. Great session by DDC. I'm the managing partner of Delphi Partners. We're a leading real estate asset management practice now based in 4 countries with a 150 plus strong team. And essentially what we do is that we offer a turnkey solution when it comes to real estate asset management, from underwriting and onboarding of assets, all the property management, the asset optimization, of course, the monetization. I mean, this year we have also invested heavily in technology, and we have launched in Cyprus our new platform that does private auctions. It's called Delphi Auctions. And our clients are institutional investors, financial institutions, and servicers in all 4 countries. Thank you.
Thank you. And a little bit about myself. My name is Yannis Daskalakis. I'm the co-founder and managing partner of DASKALAKIS and Associates, a firm operating and offering A to Z services in real estate through 3 different teams. The engineering team offering building surveying and technical due diligence and construction and development services. Our evaluation team, which offers property valuations, asset pricing, and market advisory. And our newest team, the real estate team, which we like to think that in the coming years will be established as a leading real estate agency team in our country. So let's go ahead with our discussion. Mr. Mundis, I will start with you. Our panelist team talks about an outlook to changes in real estate. So let us know, it's not one size fits all question, but give us a snapshot of what has changed in the real estate industry last year, and how does this affected the non-performing loan market and the servicers?
Okay, I mean, Yanis, thanks. An interesting question. I mean, the most important thing that we had essentially last year and early this year is the fact that you know, foreign investors couldn't travel to Greece, so they couldn't inspect assets. So certain asset classes, especially the resi assets above $1 million, were tricky to monetize. However, having said that, there was increasing demand from locals buying smaller assets, less than €500,000. And resi, I mean, the issue was we couldn't transfer ownership and we didn't have enough stock. So residential assets have been, especially the more granular assets, have been, the demand has been steady and I would say has increased. Obviously, the office space, given the pandemic, there wasn't that much of a demand, especially for grade A and grade B plus offices. Huge demand and increased demand for logistics, especially in prime logistical areas. I mean, those, let's say the secondary and tertiary kind of logistical and industrial assets haven't got the demand that we wanted, but there was demand there. And most importantly, I mean, because we hear this question that there will be a lot of tourism leisure assets or small hotels or condos being available for sale. I mean, we haven't yet seen that. However, there is strong demand, and we have worked on a couple of very big mandates on actually disposing NPLs related back by hotels. But overall, I would say now, especially the pandemic started kind of, let's say, with the vaccination scheme and all the traveling restrictions being kind of lifted, we're expecting a kind of a big foreign demand, especially in the island areas that buying in the Aegean Islands or the Ionian Islands buying prime residence. So I would say the pandemic, yes, it has changed the overall market, but I wouldn't say radically, especially in certain asset classes. Yeah, retail, smaller kind of retail for SME type of, let's say, owner occupiers has been actually hit because they have been closed for ages. And but I'm optimistic overall, and I would say that the liquidity and the demand is there. It's just we need to reform a few bits and pieces, and I will mention, I think we'll have a question a bit later on concerning transferability of the assets, obtaining tax clearances, legalization issues, and so forth. These are the things that we need to tackle first, so as the whole transferability kind of work stream being optimized in Greece.
So it's strong demand, but we have to fix some points, you say?
Yeah, I would say strong demand, not in all asset classes, just to clarify, right? Okay. Yeah. But I mean, for us, the biggest obstacle, and this is, I think, is generally in the market, having known all the professionals here, is the transferability element. It's too slow, and we need to bring that way forward. So as the time to sell will be much shorter than the actual horizon as is now.
Ms. Paderaki, I interrupted you.
What I was going to add, George is very correct. What I was going to add, which is not, it's on the real estate side, but on a different angle. I mean, obviously he's right. And one of the things that the pandemic has showed is that a lot of transactions were put on hold just because you couldn't transfer assets. And you couldn't fulfill all the required steps to legalize the whole process. The other thing, there are two other things which go more on what we do. And one was that this whole last year with the suspension of auctions has created an issue also on availability of assets. So we saw that not only in the open market, I mean, the assets that are available have been available forever, and you know, you've reached a point where you can find assets, but then the REOs that were created were a lot less just because you couldn't, you know, repossess through auction, so you couldn't sell to the open market through auction since we didn't have an auction. So that has changed, has altered the supply-demand equilibrium, with the supply being a lot lower. Therefore, demand has increased, and we keep seeing that. George mentioned it, that you know, we have demand that cannot be served right now by the current existing portfolios of REOs. And the other thing that I have observed in that one last year is, because there has been such a discussion on REOs and, you know, the next thing that is coming to the market, and the fact that from NPLs will shift into real estate owned assets that eventually will have to hit the market, is that luckily we have seen the development of extended networks of providers. So not only the distinguished guests here and the bigger firms, but we've seen also smaller firms that tackle specific issues or specific parts of the whole REO management process scheme, which have been started appearing in the Greek market, something that was missing. Facility management companies, something that didn't exist in this market up until, what, 5 years ago, with the exception of the big schemes, I mean. So facility management companies, engineers that are more focused on what the needs are of REOs, brokers that do understand what an auction is and can not only sell REOs, but can sell assets on pre-REO. So I think that has also changed. And the fact that we had, the negative side of the pandemic was the lack of product. The positive side is that it gave time to people to organize, or to companies to organize and have a new product in the market, which is those service providers that could assist companies like ourselves, like DoValue, in giving the management of the assets that is needed.
If I may add on this, first of all, I totally agree with George and Lila, as I said, in terms of the actual demand that has been recorded for logistics, for sure, during the pandemic, as well quality residential, and the office that grade A office spaces in good locations, in prime locations, there was a bit of demand. However, on the hospitality side and mainly on the large hotels in important destinations, even though the auctions were not going on, there was a demand, as we have seen it, from investors that they did their analysis and they factored in the price offered both the capex needs for repositioning or rebranding of assets, hospitality assets that needed to be upgraded. And there was an additional discount on the price offered, which was basically triggered both from the historically low KPIs in 2020 and the kind of short-term, let's say, if no negative outlook for the year ahead. So there was demand from what we have seen for large hotels in important destinations that need to be upgraded, that given the discounts that they have factored in, both for the capex and the low KPIs, in essence, there was an entry in an investment with a relatively locked up upside potential coming in the 2 or 3 years down the road. So this is for the asset class and for the portfolios, if I may say. The evolution of the portfolios on the April portfolios that we have seen during the underwriting exercises, there has been a shift in the mix of the RE component inside the portfolios. We have seen, and this is mainly, one reason could be the Hercules program that has been back in, starting December, if I'm not mistaken, 2019. There has been a change in the mix. If we see the large portfolios that came in the market and successfully had the deals and the transactions, such as Amoeba and Jupiter, most of us know them, that were more corporate loan profile, had a more corporate loan profile, and included a lot of marketable commercial area assets. I mean, George will be able to give us as well his view on this. Now we are seeing a new wave of NPLs that include more legacy or, let's say, granular assets, multifamily units, smaller unit apartments that are not that marketable. So, and I'm coming to Lila's part, but I don't know if I'm covering this, but it seems that on the REO, in the secondary REO market, it seems that for the first portfolios that were more corporatist, we had the auction or the concessional process worked a bit effectively, more effectively, if I may say, albeit small market we have there. But for the more granular portfolios that we have assets that are small apartments or storages or even, let's say, other dilapidated industrial assets, this seems to need more workout on the reprofiling and restructuring of the actual cases.
So, since Chris made the introduction on that, Ms. Paderaki, please tell us, we are bouncing back after a year, it seems like that. So, which is the physiology in the real estate perspective of the running NPL portfolios right now, and what are we waiting for?
Well, Chris described it, so I'm not going to repeat it. He very correctly said that we're moving from more corporate and big RE assets into more granular and smaller ticket sizes. I mean, if we take out the corporate portfolios from the NPLs DoValue is managing, and we also see the portfolios that are currently in the market to be sold, we'll see that the average ticket size is about 90 to 100K per asset, so quite small. On the other hand, Chris mentioned it as a challenge. I think there's also an opportunity there, but it needs work from us. So what do I mean? So the challenge is that you were referring before, your clientele was more sophisticated, people that were more familiar with the auction process, that were willing to bid and get those assets, and you could also find solutions in short sale. But however, the experience we have on the retail is one that people are also willing to find concessional solutions. So you will have concessional assets that are coming to the market retail. And it goes back to what we mentioned before, that you have a lack of product. So the idea here, and I think George mentioned that we started seeing more demand, for example, in resi, but there are no resi right now in the free market. So the auctions and the portfolios that are coming, which are more granular, including their very good assets. Don't forget that, okay, not all of them, but some of them were bankable back then. So that means that eventually somebody did something with those assets. And at the right price, you can also, you have a lot bigger clientele base that you can tackle, or you can guide that interest. So you have the small apartments, you have the land plots, or you have the small retail that people are looking for. You can find the buyers. The process of the auction has become very transparent, and gradually with the government interventions, some of the problems we see in repossessing assets are solved, maybe not all of them, so there is still work to be done, but are solved, which means that it's up to us now, and that's the challenge we have and the opportunity to train both our networks, going back to what I was saying before, both our networks, but also the people that, how to deal with auctions, for example, how to deal with that. It's not a bad thing to go and buy an asset from an auction, which is the perception in the market, whether we want to admit it or not. It's a transaction that is based on market values. It's a transaction that it does not. It means that you're not selling apartments at 20% on a 20% 80% discount, sorry, and things like that. So I think that moving away from the corporates and going into the granular assets, if handled correctly, and that's where our bets are put right now, and that's our effort. That's why, we even started our own platform advertising assets, Altamira platform, which is also for tackling those small assets. So I think that's a great opportunity that we can tap on instead of being afraid of.
If I may, a note on this, since Lila mentioned it, we totally agree that this, apart from the challenge, is an opportunity. And to this end, it's true that services, as you said, have started building their internal teams, their advisory arm. However, this advisory arm, of course, taking into consideration the number of assets coming to the market, will have a more high-level and monitoring role on a portfolio management based or an execution of the strategy. So in this essence, this is why we are here to help in a way, and provide targeted and added value advice, as we currently do with Do Value, in order to all of us, all the panelists, I'm sure, become trusted and effectively partners in the process. At the end of the day, we all want to be great at what we do best, so probably we are cooperating each other. So, yeah.
Guys, let me just add something to what you're saying. Basically, I kind of disagree with what George and Lila is bringing to the table regarding lack of supply. Looking at the classifieds, Spitogatos, Χρυσή Ευκαιρία, wherever most of the granular assets are sold, and I'm not talking about high-end grade A offices like Chris said, or new properties that, true, there is a lack of supply and huge demand. But if you look at any portal, you'll see that there's an abundance of properties. I agree that there's not enough new REOs coming in for for the players that we discussed about, but in general, the market, I mean, is flooded with lots of assets, and I mean, tertiary and secondary assets, I mean, they're everywhere. And as far as the e-auction process is concerned, that's unfortunately the way it is in Spain as well, in Portugal too. I mean, no individual buys resi from an e-auction process. I mean, large institutional players will buy from an e-auction process and then resell them after they work out the asset a bit. But it's not a user-friendly process by all means here in Greece. I mean, you go into the platform and you need to be a detective to find out what's being sold. So I don't see that changing soon if something, I mean, seismic doesn't happen.
If I may add, okay, please, Adonis.
Yes, may I add my two cents here in that very interesting discussions. First of all, you know, here in Prosperity, we're analyzing the data, and since we have more than 100,000 people visiting our platform every month, we understand what kind of assets they are looking for. So I totally agree that the biggest opportunity for the upcoming years is going to be in the granular asset class. This is the biggest opportunity. And the reason that I'm saying that is the data says that the local buyer, which is, you know, at the moment, the one that is showing strong interest, since the international buyer has postponed a little bit his interest, I mean, for the resis. It shows that the cash power for the local buyer is around 100K. So if you take into account that in 2020, 680 million of mortgages have been given from the 4 systemic banks to local buyers, and the average mortgage in Greece is 85,000, given also the LTV of 70%, you understand what is the average cash power for a local buyer to buy something. So here in Prosperity, we strongly believe that this is the opportunity. How efficiently we can, everybody in this ecosystem, in this value chain, can manage that is a question mark. But from the demand side, this is what the people are looking for. Of course, the big logistics centers, the big hotels, the 5-star hotels, you know, all the institutional investors, local, but also international investors are looking to buy something quite big. But if you take into account that, you know, the 80 billion of NPL market and 90 billion NPL market consists of the biggest majority of this granular asset, this is going to be the challenge, but also the opportunity. New business models will come. We talk only about the auctioning, we talk about the REO. There are the models that are coming into place that we have seen in other regions around the world, because not all of the assets are going to be sold. So the services need to understand what they can do with the rest of the assets. So new things are going to come into the market, and how efficiently you can manage thousands of assets, you know, distributed around the country is a big challenge for the upcoming years. Regarding now what Panos told about the supply, I could say that because we're following the market very closely regarding, again, the data, we analyze the data, that there might be a lot of supply there, but there are not a lot of not good, but a lot of properties, a lot of assets in the right pricing. The biggest challenge on the supply side at the moment is the pricing, because what we have seen from our short but important experience is that the retail seller is putting an asking price that might be 15 or 20% above the price that are willing to sell the properties. And this does not encourage the buyers to get into the negotiation. So there is a gap there between the volume of the supply, which I totally agree, there are a lot of properties out in the market for many, many months and cannot be sold, and the demand. Whoever tries to resolve this tricky issue between the volume of supply, pricing, and the analysis of the demand side will get the market.
I will totally agree with Antonis. In our point of view, especially in the large metropolitan areas, Athena, Thessaloniki, Patra, where demand exists, the problem with the properties floating Spitogatos and Chrysi Evkeria is that they are owner-occupied or owner-owned, so they are pricing the product very high. If the price is right, I think that it's in these areas at least, the absorption will be very good. In local areas, I don't know, it will be challenging, but I think that can happen.
I mean, Yannis, just on Panos' comment regarding the auctions, I fully agree with Antonis. He's spot on. There is a big disparity between what is, especially if you are a private individual and you upload your asset on Spitogatos or Chrysi Evkeria or anywhere, there is a big mismatching, I would say, there. What is the actual pricing so as the asset will be monetized, and what is the wishful pricing that me, the owner, want to have on the side. So on correctly priced, clean assets, immediately transferable, there are not that many. And I mean, just to make it clear, all the assets that they are on Spitogatos from private individuals, completely mispriced. These, they will stay there for many, many years unless services like DoValue repossess them if they are non-performing. Okay, I mean, just a note on the auction side. I believe the auction, I agree with Panos that the auction is very tricky and is not clear and there is not enough visibility and transparency, and this is what we're working on it. But I think it's the future to monetize assets. And, you know, we're talking not about private auctions only, but public auctions. And I will disagree again because we have seen a big uptake. We're selling many, we can't wait until the auction starts. We'll have more than 50, 60 registrations in the next auctions to buy assets via the auction. And we're working with Lila and other services as well locally. And I think this is the future, you know, the cost to actually onboard the asset, the timing of it. It doesn't make sense for the institutional investors in terms of net present value and leakages to onboard the assets and then monetize them. Yeah, there are some assets that, you know, the asset management plays important and you need a kind of a make-up CapEx strategy or a CapEx strategy to optimize and then increase value and monetize. But I strongly, strongly believe that, you know, the whole public auction thing needs to be reformed. And I think it's the future to monetize assets through auction, especially assets, smaller assets, right? The bigger assets can become a bit tricky. You need a lot more info, you need access, you need to internally spec them, you need to know legalization issues. So there is a bit of a gray area there, but this is why quite a few of us are here to kind of shed light to the investors to buy assets through electronic platforms. And one of them is Prosperity, and there will be quite a few of them coming on it. And, you know, I think this is the way forward anyway. Sorry, Lila, I know you want to say something.
No, what I want to say, answering back to Panos, and you cover it, is the comment about the demand side comes from our network of brokers that we keep hearing. We have interest, we do not have properties. And it's for all the reasons that Adonis and George explained. So either tricky assets, assets that have not been legalized, people getting them there on the market to see if they can sell them at the price they're dreaming, but not being ready to sell. So I think that there is a lot of supposedly supply. It's just that I don't believe that it's actual supply in the market. And as people said before me, I think they will stay there, and we have seen them being there forever. In terms of auctions, for granular assets, I think it's what George said. So it's assets that they're not that tricky in repossessing in terms of fixing them. Don't forget that the new legislation allows anyhow for auctions, for assets from auctions to be legalized if there is a problem. But generally in an apartment building of 60, 70, 80 square meters, you don't expect to have half the apartment illegal. So it's not that difficult to legalize, let's say, a semi-open space or whatever might be. And I do believe that because it is difficult to participate, and that's where the training comes in that I was talking about. But on the other hand, the fact that it's electronic makes it a lot more transparent than in the past. and all the other ways that there were. And I think that gradually people will become, because people haven't also been involved in that and haven't really tried to see how you participate in any auction. You just see a lot of steps, you get scared, you stop. I mean, I was the same way, so I'm not saying that, you know, before I was involved in this. So, but I think it's a matter of training and a matter of getting it out there, and companies like ours and the companies like the people that are on this panel, making either their networks or the actual individual owners understand what it is. But we have seen what George has said, that on the demand side on auctions, we have a lot of participants. So that, you know, we're waiting, we got a lot of calls for auctions that had been postponed, that people were waiting when the auctions will be rescheduled in order to participate. So it's not, and for smaller, so for apartments of 50, 60, 100, 120,000 euros. So it's not that exotic, if I may say, anymore. It's starting to become more and more familiar.
Yeah,
guys, I agree. I think it's an issue of pricing. Again, I agree with you guys. Negotiation margins were always big in Greece, but during the last 2 years, and especially now COVID, we have the Bank of Greece data coming out yesterday, discussing about increasing in prices universally for resi in Greece. I agree that the prices have increased, and for new properties, the costs have increased. You know, you have much better insulation, much higher efficiency. But at the end of the day, we see transactions materializing at 30, 35% discounts because nobody checks with a realtor or with a property valuer before putting on a classified. So I'm missing that amount of money. So X is what I'm asking. No broker, I mean, most brokers would not question and challenge that figure. They're happy keeping properties for ages in their databases and them not being transacted on. So of course, on the e-auction platform, you do have the distinct advantage of the property being valued and priced by a property valuer, assessing the market value, and that being the starting price. But then, of course, you have no visibility, no data issue there. So I agree with you guys, yeah.
On this part, so sorry, Yannis.
Just because the clock is ticking, and I know we will be able to talk about this for 2 or 4 hours. So, Panos, you talked about available data when pricing a property or a portfolio. Tell us about when you are called to do asset pricing or property valuations in property portfolios, in NPL portfolios. What is the amount of available data, and are they enough?
Okay, so basically the two most critical issues when comparing Greece to other markets where NPL ratios have drastically decreased during the last years is data availability and arbitrary areas. Arbitrary areas issue, we've solved it somehow, and investors are now accustomed to it. But the data availability issue is still a huge one. It differs per bank, per portfolio, per age of loan, when the loan was issued, per type of asset, and the more granular we go, the more issues with data tapes we see. To be honest, I haven't seen a betterment and an increase in the data provided during the last transactions. That's obviously the case, I believe, due to the nature of the portfolios coming into the market. I mean, if you look into huge portfolios, obviously you're not going to be getting the same amount of data that you would in CRE portfolios. Most of the data provided for both NBO and BO stages of bidding, they derive from valuations from the sell side, which have been carried out either during the loan origination or some other point during the life cycle, or maybe for the exact transaction now, maybe indexation or extrapolation. So data is hugely dependent on property valuations, but then again, there's only so much a valuer can do when undertaking a valuation or a revaluation. So in many cases, we see that we cannot locate the asset. We can most probably locate it in urban properties, but for rural ones, it can be tricky. I mean, the newer bank forms would have a prerequisite of coordinates for every property, but if you cannot locate it and you need the valuation to be sent, you just wouldn't put the center of the settlement. So you're not 100% sure where the property is located, you cannot identify it, and all the repercussions involved, so you cannot reliably price it, and you cannot reliably enforce on it unless you know exactly where it is. Sometimes you're not certain of the type of the asset. The area of the asset, again, it cannot be certain. Dimitris will certainly speak more about that on the arbitrary issues. The right on the property. Sometimes, again, it's not certain. We're not 100% sure if the data provided refers to full ownership or use tract or something else. Number of floors, anything of qualitative nature that cannot be described in a yes or no box. That's the prime candidate for getting lost in the process, especially the more granular we go. You can deal with those issues in more palatable projects, but I don't think they can be addressed for huge portfotfolios. And sorry.
Just to add up on this, sorry, Panos, am I interrupting you? If you want to go. I totally agree.
I have more things, but go on.
Okay, go. And I will.
No, go ahead, Chris. Let's keep it
lively. I totally agree on the limitations and that we have when we're doing the underwriting or every underwriting phase, and we are carrying basically we are trying to find a value for a granular real estate portfolio. We need all these data points, as you correctly mentioned, and Dimitris will follow up on this on the technical aspect. However, in the point that you mentioned earlier, either on the AVA solutions that we have, either which are technical based or the actual value that makes the valuation, this needs to be reconciling on a commercial pricing, meaning that the theoretical valuation needs to fall down to a more commercial pricing that the buyer needs to incorporate in when either he or she are allocating value on each asset. Does this price make sense in a way? So that's all I want to say. I think we have.
Yeah, I agree with you. It's just that we're leaving some things to assumptions because data just isn't there. And if you combine the unavailability of data with the speed of all the processes, from the bidding to the workouts to everything, it could seem like shooting yourself in the foot, basically. But these issues, of course, they're not only there for underwriting and pricing. Working a property out, auctioning, again, they pose issues. But it's not like we're totally different from Spain or Portugal. I mean, enforcing in Spain is 36 months work. I mean, they have the problem with ocupas or squatters, and authorities, appear to be more on their side. Portugal is faster than that, at around 18 months. So it's not like this is one of the disadvantages that Greece has and other markets don't have it. But our data sets are most often than not, more difficult to navigate around than in other markets.
So, Dimitris, you represent the technical side of the conversation here. So let us know about your views about the available data and how they affect when it comes to unauthorized spaces or surface allocation in properties or inside condition of the asset.
I would like to join what the former speaker said, George, Lila, Chris, Antonis, everybody, Panos. First of all, as I said to my introduction, we are a company in the sector from 1970, so we have 51 years of experience in real estate development and investment and in the services that a real estate transaction needs. The problem that we have focused on is the transferability of an asset that George said at the beginning. In order an asset to be able to transfer needs some legalizations, needs some technical and ownership due diligence. And when I'm speaking about ownership due diligence, I'm not speaking about the deeds that it's written in the cadastral or the land registry office. I'm speaking about if what we are buying is what is in the reality, or if even a small apartment that Lila made as an example is entering another apartment and it can be transferable or not. And in this issue, we have two different speeds. We have the free market that in order to repossess an asset, it must be cleared, both technically and in the ownership status. And we issue all the certificates that we know that we need for the transaction. And we have the assets that can be possessed from an auction. And there is the problem, because for this asset, we don't have enough data in order the people that they would like to bid and to go to an auction can understand if what they are buying is good or bad. As we say, diamond or coal is totally blind. They can take something according to the Greek law. They take it as such. They don't need any certificate in order to take it from an auction. Actually, to buy something from an auction is much easier from buying it with a normal transaction, but can you repossess it? Or it will be garbage for you. This is the issue that we must solve. Right now, what is happening in the market, and until now, the companies, the banks was buying their own collaterals. The assets that they were going to the auction was bought from the owner of the NPL. So we create big platforms of REOs, and the whole clearance of the asset was coming out through the new owner of the asset, that was the bank. That means a lot of money, a lot of time needed in order to make the asset mature and in order to be able to repossess and to resell it. What we want to suggest, and I take the opportunity of this summit and this panel, is to suggest a certificate, a procedure before going to an auction in order to have clearer assets in an auction. If we can achieve, if the NPL services can achieve a win-win cooperation with the existing owner of an asset that it's in the forced situation to go, his asset to go to a forced sale auction, to give us the data that we need in order to know what exactly is the asset that we are seeking for, and in order to create a file, data that, as the former speaker said, we cannot have them in another way until we take the asset in our ownership. That's why we create huge volumes of REOs. If we can arrange with the owner to give us these data, by offering him, for example, a fixed price for the auction, that the minimum price that we start the auction will be an X number. This is a win-win cooperation. He knows exactly the price that his asset will go on in a forced sale auction, and we have all the data needed in order to have a clear asset in an auction and to be able to have more bidders for the auction. So what we will suggest is a procedure that for all the assets that goes to an auction, we can have a green auction certificate, as we can say, that will give to the bidders the possibility to know what exactly they will face after taking an asset from an auction. Okay. They will know exactly if it needs legalizations, what is the cost of these legalizations, if it has ownership problems by entering another property that should be fixed with technical ways, or if the asset is dead, or that we cannot do anything. And we have these kind of assets as well, we all know them. So if before the auction we know exactly the status, then I think we will have more people interested in auction. And we won't use the auction as a legal tool in order to force a sale. We can use these auctions as a marketing way of selling the assets in a cooperation with the existing owners. It's not fast track sale that the owner can sell it by itself, because we have a lot of assets that the existing owners cannot sell them because they own to other people, they own to the authorities, to the tax authorities, and it cannot be sold. The only way to be cleared is through an auction. And this is what we want to solve, to have clear auctions that we will have huge demand on this, and it will be a triple win cooperation. Winning for the existing owner that will have a better price taken for his asset, less cost for the NPL owners and the NPL services, and also clear asset for the final buyer investor that can be immediately repossessed.
Okay.
Yeah. Yanni, you're muted.
Yes, Adonis.
Yes, regarding your question about data, and I would like to open up the discussion and not just focusing on auctioning. I think data are transforming the industry. And I would like to give you my sense regarding data. A lot of people are talking about data that comes from the supply side, from the market side. So a lot of people are discussing if we have enough data on the property level, then on the market level, then on transaction level. From what I'm reading and what I've seen from PropTech business around the world is that the future is how eventually you combine the market data, the supply side data with the demand side data. This is the key thing for the future. I don't want to get into the details, but there are just companies that are doing algorithms with machine learning and how they refit their algorithms with demand side data in order to improve their AVM models, evaluation models, everything that has to do with the supply side data. So there was a report a year, 2 years ago from McKinsey saying that 60% of decision regarding transaction from the demand side is based on non-traditional data, non-property related data. So we need to discover which are those parameters, those data that plays a significant role on a decision. Because why we need the data? We need the data for all the stakeholders to take wiser decision. Lila has to have data to take wiser decisions for her businesses. Me as a seller, I need more data in order to take a wiser decision. So even the buyer wants to have data. So the challenge and the technology and the data for the future is going to be how you let's say, monitor not only the supply side and the market data in order to improve your AVMs, your evaluation models, etc., but how eventually you combine the demand side, those small preferences that the people they have, how you get data from the viewings, how you gather data, Yanis as a realtor, as a real estate agent from each of the viewing. What somebody likes, what somebody doesn't like, because a lot of things are not going into the closing of a transaction because of a minor issue that probably in Panos AVM model cannot be measured. Might be the size of an elevator because somebody has a kids and wants the stroller to be in the elevator. There are a lot of different things. So as much as we get more smart regarding data, the better the decisions are going to be among all the stakeholders in this value chain.
Actually, sorry, because we are speaking regarding the data that we want. We have data that it's needed in order the buyer to have a clear picture of what he's buying, if it's nice, if it's not nice, if it has an elevator or if it does not have an elevator. And we have data that it's mandatory according to the authorities in order to make the transaction, in order to make an asset transferable, as George said from the beginning. This is the issue, to have the necessary data in order to know if an asset is transferable or not, on what will be the cost in order to be transferable.
Yeah, I mean, just sorry, Chris.
So quickly, so Bradley, we totally agree with Dimitris and what Adonis said. However, the data and the technology and what data we utilize in the AVMs that are critical in the output, we, apart from comparables, as already all of us know, anything that has to do with the transaction, public listings, which are quantifiable per se, you need data points that are related with the sentiment of a user, the sentiment of a person that goes to an Airbnb facility, on the services that someone is getting from a hospitality unit. So practically, this kind of, if I may say the words, create a sentiment that gives us the, let's say, comfort in to the pricing when we do, even for hospitality assets. Of course, other aspects of data, on the data side, again, have to do with demographics, linked to local population growth, to income, linked to proximity of point of interest. These are factored in the actual AVM exercise that we run and the solutions that we have. In a way, apart from this, we have anything that has to do with transaction volumes that you can get from the transaction valuation registry, or even the Hellenic Statistical Authority, that they don't give you actual price per square meter per se, but they give you the trend and the volume that where the market is going in terms of volumes. George, sorry for interrupting, you can go.
No, Christos, you're spot on. Dimitris and Andonis, I fully agree. I mean, we operate in the UK and Cyprus as well, that the land registry is way more evolved than the land registry here in Greece. I mean, what I would say is that we need here in Greece transparency on transactional evidence as well. So I believe the government and the land registry has to play a major role as well in this. I mean, in the UK and Cyprus, you know, horizontally or vertically divided, the next plot next door, how much has been transacted, when and where. And, you know, you can do proper analysis instead of here adjusting asking prices or having, you know, postcode prices. There is a lot of subjectivity element there, which especially on the underwriting front, you can miss it completely. And that's why, you know, our AVM model, you know, I am the most rigorous critical assessor in-house, because quite a few of the things don't necessarily work because we haven't got that transparency in transactional evidence. And I mean, we're working with doValue Cyprus, for instance, and you know, when they bring their analysis in their asset reviews, they know that George's plot is 100K because the next plot there has been sold in the last 3 months, and it has been sold for 115K and is 50 euros per square meter. We need to have this across the whole Greece, and it needs to happen faster than is currently happening, because the evidence that we get here in Greece from the Ministry of Finance are not adequate evidence to do a proper job. This is what I'm saying. And I'm not being critical either to the government or any state's person. It's just we need to evolve if we want to have more investors, especially institutionals, coming to our country.
We have, you know, something that we say here in Prosperity is that instead of looking for data, we need to create data. So, you know, whoever is being involved in the process, we need to gather data. So, because I get a lot of questions, why, for example, that we have 1,200 properties, why we're collecting 300 data points per property? That question comes quite often to myself, why you're doing such an analysis on each of the properties. So, instead of looking, and I completely agree with George that, you know, the government needs to do what they need to do regarding the transactional data that are missing from the market. But I think each stakeholder in this value chain needs to start collecting valuable data from each side. I mean, from the technical side, from the commercialization side, from the REO side, from the auction side. If everybody has its own data, I think then we can somehow cooperate. The market can cooperate. It can do great things together.
Yeah, I mean, we need an MLS at the end of the day, most probably. Something to aggregate everything together, because each broker and each consultant, obviously, our data is our data and it tries to remain our data. So that's an issue. I mean, if what George happened, doesn't materialize, if the state doesn't intervene and actually record transactions and deals with the issue of some of the objective values, the tax assessed values, that will not happen fast enough.
Just a small comment for the MLS. From the broker side, in order to have MLS, you need to have sole agency agreements. Because if you don't have this, which in Greece it's not a common factor here, you cannot not proceed with MLS. So we have to start from somewhere else. We have less than 1 minute, I think. So just to make the devil's lawyer, if I may say that, I totally agree with Antonis for the need of data collection with the need of technology, and that the technology can help us do our work more efficiently. I totally agree with all of you for the need of AVMs in order to make our life easier and more quick, if you want. But just a free question for all of you. Can AVM save our lives? Do we need the human factor in this scale, and how important is it?
To be honest, let me jump in and try to give a framework on the discussion. The application of technology-driven solutions for underwriting projects in granular portfolios are basically of vital importance. Our experience from research sell-side securitizations, mega securitizations, have shown that the use of enhanced AVM solutions based on big data analytics and machine learning techniques are certainly beneficial. However, as we pointed out, Yannis, the important role and vital, I must say, is our role of the real estate experts in assessing and calibrating the output of these AVMs. Again, do they make sense? Any output from technology-driven solutions needs to be critically reviewed by us and then calibrated in order to be on a framework, basically a pricing that makes sense. At the same time, though, this kind of human factor that gives the input on this and calibrates the output needs to be on top on the technology software-based solutions that need to be continuously adjusted in order to improve and basically at the end of the day optimize the machine learning element. That's what I think in the factor.
I agree with Chris. It's a tool. It needs to be used as a tool. It cannot be a standalone solution. So it's a tool, and because it feeds on data that's not there, it needs lots of human intervention, especially the more granular you get into.
And if I may add to that, definitely the people said that data, and with the lack of data that we Adonis, Panos, everybody mentioned that we have a lack of data, so the AVMs on a standalone basis, at least in Greece, can lead to very misleading conclusions. But I will say as well, unless we have the match of demand and supply side data on a lot of points, what Adonis mentioned, the example I usually use is the following: 2 apartments on the same building. Some of you must have heard it before. So 2 apartments on the same building, on the same floor, same square meters, same construction year, one facing the sea, the other facing junkyard, front and back. So would an AVM come back unless you had all that distinct, or one hearing some noise from a school, the other being far away from the school? So small things that make a huge difference. So I think that unless we reach the point of sufficient or extreme, I would say, data points there, then we need to have the human factor judging the results that, as Chris mentioned, judging the results that you're getting.
Regarding your question, Yanis, I'm not sure if AVM can save our lives. Definitely, the customer experience can save our lives. So this is what we need to be focused, and we need to be transparent. We need to do things easy, and we need to do things with the right speed. It's all about customer experience. This is the future. You know, the younger generation comes into the situation in order to get involved in the real estate business. They are more digitally educated, so they will require good customer experience. This is what we have to be focused, everybody here, eventually.
I totally agree with you.
I want to make a last comments if it's possible. We are speaking about AVMs that we are keeping general characteristics of any asset. But the real problem that we are facing, okay, we like the asset, we have the general characteristics. Can this asset be transferable? This data cannot be controlled by an automatic machine. Each asset is one of a kind. We must find the necessary data needed to see that it's transferable, the property. This is the key issue. We have a lot of cases that the properties cannot be repossessed, and we are facing problems and waste of time and money in order to repossess the properties. And also regarding collecting the data, why I put the existing owner, the one that his asset will go to auction in the whole picture, because he has data that we won't be able to have them after. He can have a legalization with former laws. We can take this from him. This will win us money and time, things that we can speak for hours. But my point of view is we must be 100% sure that the asset is transferable, and each asset must be held case by case. Thank you very much.
This is why we are talking about the human factor intervening in the machines. So we are 7 minutes late in our schedule. I don't know if we are able to make a cycle for a closing comment from each of our participants, if Martin allows it or not.
Yes, go ahead with the closing comment. I mean, there's so much to talk about on this panel. It seems a shame to cut it off shortly. So please go ahead.
You are the best. Thank you. So I want a closing comment for each one, and I'll let you go.
Hi, George here. Thank you very much for your time, Martin and Yanis. It's been a pleasure. The only thing that we haven't mentioned actually, and I think it's the future as well in Greece, is bulk sales. I mean, we're working now on 3 big bulk sales, more than 500 each in Greece. So it's something that we need to pick up on a separate conference, bulk sales of REOs, either on an SPV or assets consolidated on the bank's balance sheet. But I think the future will be promising. I'm glad that we see new companies coming in, more tech-based, and I think we need to evolve. We need more data, more transparency. We need the government to intervene and make the whole process of transferring ownership a lot smoother and a lot more transparent. That's it for me. Thank you.
Just very quickly from me. We need to close this on a positive note. Greece is the largest NPL market in Europe currently. We have the most transaction volume currently being closed or in signing phase in 2021, and that's going to be the case in the years coming forward. I mean, we still have a big supply of NPL, and this pandemic will create a bit more, bad loans. So all eyes are on us, and it's up to us to deliver what we need to.
So my last word, if I'm allowed, challenges are here. We talk about auctioning, we talk about REO management, we talk about commercialization of the assets. So there are a lot of different steps in the process that needs to be fulfilled from many different stakeholders. So, exciting times are ahead of us. So we strongly believe that technology and data will play a significant role on these kind of processes. And we will be here to monitor the market and to do what we have to do.
Dimitris?
Yes. I didn't have time to analyze what I said about the green option certificate. My co-speakers can think about it. I am here to discuss it again, and anyone that wants more details about this idea, we can discuss it in private also. We must make the auctions friendly, because we have huge numbers of assets coming from the NPLs. They will go through the auction procedure because we don't have any other tool to proceed. Either they will go to REOs and then somebody will have to pay that, or we can find a solution to do it before and to have more people interested in auctions. Right now, there is not more than 10–15% of the assets that are going to auctions that going to private individuals, and they are not going to REOs.
A very quick conclusion as well. It is important to improve the quality of available data, especially on the public registry, the Technical Chamber of Greece to share legalization data, as correctly pointed out, and the notaries to share detailed transaction data. These have a major role to play, to be honest. This is another big project for Mr. Kyriakakis, the Minister of Digital Transformation. I wish he could hear us and have been part of the discussion to give us his thoughts. So, thank you all.
Thank you.
Yeah, and last comment from me.
Yeah, that's right.
I think what we need to take into account is that up until very recently, the REO and the NPL market was mostly handled by banks. We have in the last couple of years starting to see the private side, if you want, and the investor side coming into this picture, and also the real estate companies come from the private side and investor side. So I think we need to rethink the way we're doing things, summarizing a little bit, including the data and all the rest of the things that the colleagues mentioned here. But I think we need to rethink how we're doing things, and we need to challenge our existing way of action. And it is our opportunity here, apart from a challenge, to create processes and to see things differently than what organizations like banks used to. So I believe one of the things that in DoValue we're trying to do is organize things differently. As I said, changing the modus operandi and producing results that we couldn't see before. So Dimitris mentioned the 10, even it's not, I don't think it goes to 15%. I think it goes 8 to 10%. But up until now, nobody was interested in actually promoting the auctions or making the auctions friendlier to people. So generally, let's not go through details. That would be my comment, is let's change the way things are done. It's in our hands. Thank you.
So I would like to thank you, all of you, for your time. Thank you, Martin, for the invitation. And I hope that we will be able to meet each other soon, either for work or for the next session this October.
Yanis, thank you. And lady and gentlemen of the panel, really sincerely a great panel, great discussion, so much information there, useful for us and our audience. And as Yanis said, we hope we can continue this in a live setting. As I mentioned to you in the pre-panel chat, it will be my pleasure to meet you in person towards the end of the year when things get a bit back to normal. So my sincere thanks again, and goodbye.
Bye-bye.
Thank you.
Thank you very much. Goodbye, everyone.
Bye.